Hey, how's it going, everybody? Mike Weber here. Let's talk about real estate and more specifically, whether or not we're seeing a continuing trend of home prices really starting to stabilize in the month of November. Let's also take a look at what's happening with the supply of inventory for the month end of November, as well as closed sales, so we can get a sense for what's happening in the market. We have been seeing kind of much of the same going on in terms of really low inventory. Prices really kind of tapering off from that earlier peak that we reached around June, and closed sales starting to drop a little bit as well. So just less overall activity, very little homes to choose from out there. But even in that situation, prices do seem to gradually be falling. And so the big question that we'll try to answer is whether or not prices are beginning to stabilize. So let's go ahead and take a look at what's happening on some of these charts. So first, we'll start off here with Los Angeles County. And when we look at median home prices, we see that we are still up 13% year over year, which is fantastic. But as many of you who watch my videos probably remember, 6 months ago, we were up closer to 20%, maybe even above 20% year over year, some of those months. So a lot of those gains have kind of tapered off a little bit. Still, that's a substantial gain in a short period of time. But as you can see here, several months now, we've kind of tapered off and really been flat. I mean, even though interest rates have been rising a little bit, I mean, they're still at historic all-time lows, in the big picture. And even with that stimulus for the housing market, prices are still pretty flat and they're not rising anymore. So this is definitely interesting. Now, if we look at the supply of inventory, this kind of helps paint the picture as well. We've really haven't had this low of inventory in the 8 years I've been in the real estate business, and really going back as far as my charts will allow me to look. It just seems like every month that goes by, inventory seems to just fall more and more. So now we're down here at 1.6 months supply. And if you compare that to a year ago, which was already a pretty low year, a pretty poor year in terms of inventory, we're down 42% compared to where we were at the same time last year. So again, with such low inventory in the market, to see prices kind of tapering off like that tells you that at least for now, buyers are no longer willing to pay as crazy of prices as they were 6 months ago. So instead of getting the 10, 15 offers, the $100, $200, $300,000 over asking, things are coming more into balance, which may mean 3 offers or 5 offers and a less amount over asking than what we would have seen as commonplace maybe 6 months ago. And if we take a look at the closed sales, we see that those are still fairly strong, fairly robust. We are down about 12% compared to a year ago, which kind of makes sense. I mean, if there's so much less inventory on the market, it kind of makes sense why sales, would be falling compared to a year ago. So again, we see that there's less activity, there's less homes on the market. Prices are still quite a bit higher than they were a year ago, but things have slowed down and they have trended down for 5 months now, nearly 6 months in a row. Finally, I just want to take a quick look at the South Bay beach cities and see what's happening comparatively with home prices there compared to Los Angeles County. So in the South Bay beach cities, as you can see here, median home prices are now only up 5.4% compared to where they were last year. So earlier in the year, if you remember, we were way above. We were at one point at around 20% year over year price growth. Now that has dropped off and tapered off rather substantially to only 5.4%. Now there's been a lot of interesting things happening in the market that are definitely going to affect what happens with home prices, in my opinion, as we get into next year. And the main big things that really could either cause prices to stabilize, continue to go up, or possibly even come down in the future is if the Federal Reserve actually does anything with interest rates. Of course, they have started to taper their bond buying a little bit. That definitely does have an effect, but since they're tapering so little, the effect is rather small. However, just that little bit of tapering could be causing some of this sort of flattening out, some of this stabilization that we're seeing now. The real concern would be if they actually start to raise overnight rates, the federal funds rate, which of course would eventually filter into mortgage rates. And if that were to happen, that would create some substantial downward pressure on median home prices going into next year. Now, do I think that's going to happen? I highly doubt that. I think the Fed is kind of caught between a rock and a hard place. And most likely, I think they're just going to kind of try to weather the storm. So keep interest rates close to zero, maybe try to taper a little bit on some of the bond purchases. Of course, the government's going to spend a whole bunch more money, which means they're going to have to print a whole bunch more money to be able to sustain that spending. So it's going to be interesting to see how this all plays out. But at least for now, the trend we're seeing is a stabilization in prices, inventory remaining low. And I get the sense that we're going to see a similar trend going into at least the middle of next year. So obviously, we'll be keeping track of what's happening. We'll keep you informed. Let me know what you guys think is going to happen as we move into next year, what the Federal Reserve is going to do. If you like the video, give me a thumbs up. Subscribe if you haven't already. Thanks so much for watching, and I look forward to seeing you on the next video. Take care.